Yep. All right, we're about to get started. Give it about 30 more seconds here. It's 12 o'clock now. All right, let's get it started. Okay, it is 12 o'clock on Tuesday, September 15th, and we are going to go into my weekly update on the markets and talk about everything prop trading. So my name is Derrick Oldensmith. I am an associated member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure. Actually net short right now, even though those shorts are pretty heavily concentrated and my longs are a little bit looser than that. Market's in an interesting spot, which we will talk about. Yeah, a lot of similar positions. The way that I do tend to trade is a lot of the same names. I will have swing positions in, bigger picture positions in, and then I will sometimes very actively day trade around those swing positions. So you might see, on a weekly basis, a lot of similar positions kind of go by. About me, so I've been trading professionally since 2008. I joined T3, I guess it was T3 Capital originally in 2010, T3 Trading Group in 2011. So I've been with T3 for about 10 years now. I basically started with the firm at the entry level. It's an entry-level proprietary trader focused on equities. The truth is, everything I've learned about trading, I've learned at T3 over the course of the last 10 years. Risk management's the key to the business. I realized that pretty early on, so I made rules for myself, risk management rules for myself, and that enabled me to make some profits, pretty early on in my trading, even if they were in a very small way. And then the way this business works is all about scale. So if you're able to develop consistency, then you want to be able to add scale, and that's where T3 really comes in if you're a professional proprietary trader, because the firm capital access that you're able to get granted to can really add scale to what you're doing. I started a trading desk for T3 in 2013, so I've been working with and managing professional traders for 7 years now. I've mentored well in excess of 100 professionals for the firm. Currently have a really large group of traders in excess of 50 spread all throughout the United States. And overall, things have been going pretty well. I've been really happy with my experience here at T3. So I'm going to be talking about trading today, primarily. I'm also going to talk a little bit about T3 proprietary trading, some of the account options that we have here as far as professional accounts, retail accounts. If at any point you have any questions about anything, feel free to reach out to me. Here's my email address. I'll show it again at the end. You want to talk trading? I love to talk trading. You want to talk about T3, potentially getting involved with T3, reach out to me. All right, let's go to the charts. Okay, so the way that I approach the market, it's really what I recommend, is big picture down to small picture. Everything I do starts with the big picture of the market. Daily charts, weekly charts of the indices, the SPYs, the Qs, the IWM primarily. So, the S&P, the NASDAQ, and the Russell 2000. That's primarily what I look at. And then everything gets broken down from that big picture to small picture. So big picture technicals, big picture news, big picture qualitative fundamentals, breaking it all the way down to small time frame for execution. I think that even if you are strictly a day trader, which I am not, I do day trade, but I day trade and I swing trade. Even if you are very strictly a day trader, you have to have an eye towards the big picture of the market, because the correlation between individual equities and the market is very high. And if you are trading the market, you need to be a student of the market in order to be successful. So everything starts with big picture, works its way down to small picture. I'm very happy to say that so far for the month of September, my team and I have been really, really on point with the big picture of this market. And that's fantastic because then we can break it down to the small picture, and it makes the small picture much, much easier. Starting with the week that I decided to take a vacation, I knew going into it, we had already seen, and one of the things I want to talk about today is VIX deviations. We had already seen, I believe it was starting on August 26th, the VIX start to deviate from the market, meaning usually they trade inversely of each other, but starting on August 26th, there was a lot of underlying signs that this market was getting a little bit overblown for even, a good bit before that. Breadth was terrible. It was just a few companies really leading the market higher at that point. We were starting to turn parabolic as far as shape of the chart goes, which we know is unsustainable. That's, momentum creates parabolic moves in the market. The definition of momentum is the greater the price, the greater the demand. So, in other words, the higher the price goes, the more people want to buy it. And that leads to, again, a parabolic movement in charts. And that can happen, that can be sustained for a period of time, but it cannot be sustained forever. Eventually, those momentum moves that lead to large extension in the market have to correct. And there are two ways in which a market can correct: through time or price. So we saw back here a correction in June, right, where the market started to go parabolic a little bit. This was an island top that we caught really well, and then we came back in. And yeah, there was a price correction here, but it primarily turned into a time correction. After this really big move from the bottom in March to this peak here in June, we price corrected a little bit, but then we went sideways for a solid month and a half before kind of giving the next leg up of this rally. And then into that next leg, again, we went parabolic. Apple was going nuts, Tesla was going nuts, and then again, starting on August 26th, we started to see that VIX deviation. The VIX started to go higher as the market was going higher. I've seen that happen before. When it's a multi-day thing like that, that deviation can't last. Either the VIX is going to correct or the market's going to correct. They're not going to be able to both go up together in unison for an extended period of time. So, of course, that's when I had my great vacation out to Yellowstone and Grand Teton National Parks in Wyoming. Beautiful country. America's an amazing country. If you've never traveled to those parts of the world, I highly, highly recommend checking it out. But my vacation was really me trading. I ended up trading the open, every day till really at least 10:30, 11 a.m. Eastern. So it didn't turn into being too much of a vacation, but I still got to enjoy myself. And that was just because this price action here, the opportunity in this price action is something that you can't miss. And that's just the way it goes sometimes when you're a professional trader. The beauty of being a professional trader is you can do it from anywhere in the world. I think some people, if you've been following my weekly webinar, you kind of know my story. I live in Manhattan. I work out of our Manhattan office. I run T3's Manhattan trading floor, the headquarter office that we have there. I have spent basically 2 weeks in my place in New York City since February. First I was in upstate New York for a few months, then my wife and I went to Buffalo, Wyoming, beautiful country, for a couple months, and then I had this vacation plan, and now I'm in Montana as I speak to you guys. But I couldn't not trade this. So we saw the VIX deviation, we're building into our shorts into these few days here, really kind of had a blow off on this day to the upside, and then finally that massive correction came in. And one of the highlights of this market environment is speed. This market moves faster than any market. I've been doing this professionally for a little while now. I've been with T3 for 10 years. I know guys who have been doing it for longer. Guys at the company who've been trading, since the 90s, and they've got really cool stories about how the market used to trade in fractions. I never traded a market when it was in fractions. I've only traded a decimalized market. But the statistics show, and statistics are important to be knowledgeable about, which is something I'm going to talk about in a second with this correction. The statistics show that this correction here in the market, particularly the NASDAQ correction, I believe, so technically a correction is a 10% down move. This NASDAQ correction was the fastest correction in the history of the market. And the previous fastest correction in the history of the market was, you guessed it, in March. In March, we had the fastest bear market of all time, and that was followed by the fastest bear market recovery of all time. And now we have the fastest correction of all time. So we want to know our statistics. We want to take things in context. We were able to catch this down move in the market really, really well here, this 3-day down move. And, you know, if you know your statistics, that like 10 to 15% down move that typically happens to the market once or twice a year, that's usually it. That's usually a typical market correction, and then the market's uptrend tends to resume from there. So one of the things that we want to assess, and I'll talk about the nitty-gritty of kind of the price action here of these few days in a second, but one of the things that we really want to assess is, now that we have had a correction here that is in line with history's typical corrections, is that it? Is that all we're going to see, or is there potentially more? Now, obviously, you know, what's that great economics saying about statistics? There's lies, damned lies, and statistics. I think I remember my economics professors back when I was in college kind of saying that one. So, you know, statistics are something that you want to be knowledgeable about, but especially when it comes to the market, we've got to remember that every single scenario is new and every single scenario is different. So the context of this, you know, correction here, which has been about 10%, is coming from this incredible bull rally that we've seen since the March low. I mean, this as a percentage move is unbelievable, right? We were at SPY 220 to SPY 360 in, what is this, 1, 2, 3, 4, 5.5 months, right? So that's an incredible move. Would it be unrealistic for the market just to go back down to where it was in July? Down here at 320, which is like SPY 30, S&P 3200. I don't think that that would be unrealistic at all. So is that going to happen? I don't know. We have to kind of take it one day at a time, let the market technicals tell us what to expect. And this is where we've been really on point for, honestly, this entire month. First, in catching this down move. So starting with this day, September 8th, the third day of the correction, we closed on lows. And then after hours, about 5 p.m., 5:15 p.m. Eastern, something like that, that's when the news came out that AstraZeneca was halting their COVID trial, the COVID vaccine trial, because one person may have had an adverse effect. And the market, after hours, that they capitulated all the way down to this a little bit below 330. So 330 is our first major support area that we've been paying attention to. And from that, so once again, we had a VIX deviation on this day, though. So now here, the VIX was still, the SPYs were still going down, the market was still going lower, and the VIX was also actually starting to go lower at this point. Again, our VIX deviation that started on, I believe, August 26th. We can type it up. Let's take a look at VXX. When did VXX bottom? Right here. August 26th was the bottom. So look at this move higher that started in the VIX, even as SPYs were going up. And then here on this day, on September 8th, market closed on lows. It was still a brutal day for the market. Let's take a look what the VIX did on September 8th. September 8th, you see it's a big red bar here, but compared to the closing price of the previous day, it actually closed flat to down. So they sold this off at the same time as they sold the market off. So again, we had that VIX deviation. So technically, and we're getting into the nitty-gritties of some technicals here, when markets close at lows like this, usually what you can expect is a gap down the next day. And gap analysis is a huge part about my trading. But with that VIX deviation, my team and I were talking about, that combined with the now downside extension on the daily chart here, we were a bit extended to the downside. The way I measure extension, very simply, is where the market is trading versus where the 8 and 21 EMA are. That's my blue and red line. I talk about this all the time. Moving averages are tools. They're not support and resistance lines. The space between the 8 and 21 EMA on any time frame chart is the space that I consider to be the equilibrium area for any market that I'm looking at. So when the market was all the way up here, when the SPYs were at all-time highs of 358.75, and my upper band of equilibrium, as represented by the ADMA, was at 349.50. I had upside extension by $9 in the SPYs. It's significant. And now here, after hours, when the SPYs went all the way down to 330, I've got the SPYs at 330, and I've got the ADMA at 344. So now we were extended to the downside by $14. And we started to see that VIX deviation. Based on that, we actually expected a gap up the next day instead of the typical gap down that you will see on a week close. And that's exactly what we had. We gapped up the next day. Technically, it was a common gap up, right? We have all these names for gaps. The name's not what's important. When you're doing gap analysis at the beginning of each day, which should be part of a trader's morning research process, what you're really trying to assess is what does this gap do to the participants who are already in the marketplace. So a common gap is a gap that tends to get filled. A common gap up in this case tends to get filled because longs come in and take profit into that gap. But because we closed so weak the previous day, really what it was doing was trapping shorts. So I told my team that morning, I don't think we're going to get the gap fill. I think that the market's going to work its way back up to about somewhere between 340 and 342 in the SPYs over the next, I think 2 to 3 days. Happened in one day. We put in a high, we actually overshot that a little bit. We went up to 342.46. So where am I coming up with these numbers from? Like how could this be so accurate? First of all, I am not always this accurate, right? I'm good enough of a trader to have been doing this for a decade now, but I am by no means a perfect trader. The perfect trader does not exist. All of the best traders are constantly striving for that perfection, but the perfect trader does not exist. So where do I come up with that upside number? It's just that equilibrium area again. All I'm expecting after this big sell-off is a snap back to that equilibrium, and then we can kind of take it from there and see if the market pivots back down. So that's what we're looking for. We got that bounce. The biggest thing that I was wrong about was just speed. And this is something for my own personal trading. I'm still improving as a trader. That I got to work on a little bit is understanding how different market environments provide different levels of speed. So for example, this market environment in March and the initial bounce back in second half of March, beginning of April, the moves were so fast that by the time we got into the second half of April and the beginning of May, the moves that I thought would take a day would sometimes take 2, 3, or 4 days, right? And then I got used to that slower speed, and that speed dulled out even further here in July and August as the market kind of grinded up. So I got kind of used to that speed, and now I'm like, okay, we should bounce to 342 in the SPYs. I think it's going to take 2 to 3 days. Guess what? It took 1 day, because with this increase in volatility, with this breakdown, also comes an increase in speed, which is generally a trader's friend. So that happened in 1 day. And then from there, what we were looking for in that area, that 342 area, was the potential of a lower high in the market. So this is where you have to understand trend. An uptrend is a pattern of higher highs and higher lows. A downtrend is a pattern of lower highs and lower lows. I am a stickler to my definitions. I will pay attention to trend lines a bit, that kind of connect the dot game that traders play. I'll pay attention to it. Sometimes it's a self-fulfilling prophecy. But for me, the connect the dot game that a child could do is not as important as understanding the supply and demand dynamics, and those supply and demand dynamics are represented through my definitions. Definition of an uptrend, pattern of higher highs and higher lows. Definition of a downtrend, pattern of lower highs and lower lows. So the question is, can we see more downside follow through? Is this uptrend reversing into a downtrend? Well, what is a downtrend? Lower highs and lower lows. Well, here's a high, here's a low, here's a potential higher low. And you could argue that this here then became a lower low. So we pivoted exactly where we expected it. Market worked its way back down. And guess what? Got extended to the downside again. This is now 2 trading sessions ago. So that's Friday of last week. So I don't really actually consider this to be a lower low. Yes, it broke this low, but I'll tell you why. It's because the after hours, if you were looking at a chart that was also showing you the futures market, it's not. This low on this day is actually lower than this low. So it's kind of questionable on whether or not we have a downtrend. I would argue that we are not in a downtrend on the daily chart in the S&P yet, until and unless we get below 330. So there's the potential of us to bounce even higher than 342.50 and still not be fully in the clear on this market, which is something we can talk about. But again, Friday last week, a little bit of a choppy trading session. We tried to break lower but couldn't, partially because the market was a little bit extended to the downside. And then so far this week, yesterday was a solid snapback rally, which again was our expectation. My expectation for yesterday was a bounce back to 340 in the SPYs. And I wanted to see if that 340 area would hold. Obviously, we're above that today. It worked out as a good trade yesterday. Yesterday was an interesting day. So here's just my 5-minute chart going. This is today, yesterday, Friday, Thursday. So what I'm talking about now is yesterday's price action. So yesterday we gapped up. Technically, it was another common gap that did not get filled. We've seen a couple of those since this market has broken down. Today's potentially a third one. And this initial rally off the open was so impressively strong. Like, again, the space here between my 8 and 21 EMA is what I consider to be equilibrium. It's very difficult for the market to have this level of momentum where it never even corrects down to the 8 EMA that lasts for a whole hour off the open. A lot of times you will see that in the first 15 minutes of the day, maybe the first 30 minutes of the day, but the whole hour is a lot. But pre-market, my morning meeting, again, we spoke about seeing if we get a move back to the 340 area to potentially come in and short. Now, I didn't expect how fast it would happen, but if anything, that kind of makes me like to short more because now I have extension on the 5-minute chart and I had even more extension on a 15-minute chart, right? Here's yesterday's price action on a 15-minute chart. You can see at this high, 340.38, the 8 EMA is all the way down here at 337.40. That is solid extension. But then again, impressively here, the market time corrected. Technically, this is a bullish pattern. But that bullish pattern eventually failed into the afternoon. We've been seeing these afternoon sell-offs on a few occasions recently. I wouldn't be surprised if we see another one today. I don't really like those afternoon sell-offs. I think that they're tricky to trade, to be honest, because it's like market's going sideways, market's looking bullish. Technically, what the market did yesterday up until 12:30 was a bullish consolidation. Technically, what the market's done all day so far today is also a bullish consolidation. But we've been seeing those intraday kind of bullish consolidation patterns fail into the afternoon recently. Again, it's a little bit tricky to trade because it's hard to anticipate. I prefer when that happens earlier, when you get a bigger failure or bigger correction from the beginning of the day when you're kind of laying into that trade potentially. And then, same thing kind of happened today. So anyway, we had a decent little short trade, but we didn't get fantastic follow-through yesterday. This morning, we had a gap up again. Again, good news yesterday brought this gap and go yesterday. AstraZeneca has now resumed their trial. Pfizer's made more headway on their vaccine trial. You had a whole bunch of buyouts take place yesterday. NVIDIA buying out ARM for $40 billion. Massive. IMMU got bought out by Guild. Also, pretty serious buyout. And then obviously all the TikTok news that's been kind of coming in and out. We'll see how that one actually plays out. I haven't been overly optimistic about that from the beginning, but we'll see how it goes. And then today, same thing. Gapped up. We talked about shorting in the morning meeting this morning, shorting versus the 15-minute high and shorting versus that daily pivot high up here, this 342 50 area, to see if that is what's actually able to hold. So that worked out pretty well. We're able to nail the exact high of the day today, but there really hasn't been fantastic follow-through so far. It's 12:30 right now. We still got a few hours into the close, and again, we've seen, these solid afternoon sell-offs coming in the market recently. But technically, we're looking once again at a bullish consolidation. And again, I've gotten, I've been playing this market fairly market neutral and then leaning long, leading short. I'm kind of leaning more short right now. I'm net short here again into this area to see if I can get, at least an intraday gap fill, which would, bring us down to maybe 339, something like that. I feel like I'm not asking too much, but this market's been holding up fantastically well. So we'll see. And because in my mind, this is technically not a lower low. I wouldn't be surprised if we did overshoot this a little bit to the upside. That's been another one of the hallmarks of this modern market, is that the market really likes to, and it's because of the algorithms to a large degree. The algorithms like to really shoot the market up more than people expect and kind of bring it down more than people expect. It's also what's creating kind of the increased speed in the marketplace. There's nothing we can do about the algorithms, but we want to understand their existence. We want to understand how they operate, how they affect the market, because knowledge is power. When you know that kind of stuff, you can position yourself appropriately and not be overly surprised if this market shoots up to 347.50 before then possibly rolling over and failing. So the big question, obviously, is what happens next? And going back to what I was talking about earlier about statistics, statistically, this pullback is more than enough for us to now bottom out somewhere down here and kind of resume our uptrend. But that statistics in the context of the degree of this move makes me think it's very reasonable that we could actually break our 330 support area in the SPYs and work our way closer down to 320 over time. I do not think it's very high probability that we break this high anytime soon. And honestly, my biggest expectation, if you also understand seasonality, and we have this election coming up, is honestly just volatile choppiness for the next couple months. That's my biggest expectation as of right now. Obviously, I do take it on a day-by-day basis. I adjust my thought process on a day-by-day basis based on new news, based on how the technicals update themselves. But at least for right now, I'm expecting volatility. I'm expecting choppiness. I mean, today's impressive, right? SPYs are up 0.9% as we're having this conversation. NASDAQ is up 1.7%, and it's holding up really well. So that's what a lot of what I'm looking at. As far as individual positions go, I still have some of these positions that I came in and that I was really purchasing on this day, on that third down day, including a little position in Apple. I got a really good price on this day. I did not get shaken out on this test of 110. I was really impressed how well this 110 held a couple days ago. And Apple, by the way, is one of the big keys to the market. Not only because of how big its market cap is, well, honestly, primarily because of how big its market cap is, but the way this Apple goes and the way the FANG stocks go, they've just become such a large percentage of the indices that it's really going to be affecting the market. So for Apple right now, we really need to pay attention to 120.50 on the upside. That's where the bulls want this thing to get above. And we need to pay attention to that 110 on the downside. Apple breaks 110 to the downside, then you probably have SPYs breaking 330 and SPYs working on their way down more to that 320 that I was talking about. I have a little position in Apple right now. But if Apple is actually able to break this 310, the next real level is $100. If Apple can see $100, I'll be really excited to come in and buy that dip. That's the kind of dip that you really want to be paying attention to. And I don't know if it'll see that price or not, but I'm prepared for it if it does. So Apple is obviously one of the ones that we really need to be paying attention to right now. The Chinese names still are really impressive to me. Same thing, I kind of repurchased a little bit of Alibaba on that same day when I was coming in. I was doing a lot of discount shopping on that third day down in the marketplace. It's bounced back. It's up a percentage point on the day. One of the reasons why the market's up this morning is just because China had a decent economic number. So I'm paying attention to Baba. I'm paying attention to JD. Some of my traders today traded this NEO with some success. I see it's kind of rolling over here in the afternoon and failing a little bit. But that one's kind of been in play. I think one of my traders may have been involved in this Billy today, which is another Chinese name that kind of worked out. I personally have not been involved in Billy. I have not been involved in NEO for a while. I've had a lot of success shorting NEO in the past. But currently I have no position. I'm involved in this RKT, which I like pretty decently, but it really needs to clear above 25 to start proving itself. My shorts are Lyft and Uber right now. This Lyft is one of the weakest names of the day. It's down almost 3% with the market still being solidly positive. Uber has just been really impressive on this uptrend that it's come into. And part of the idea behind being short for today is now we have really solid upside extension in Uber into resistance. So it's 1, 2, 3, 4, 5, 6 days up. This is the sixth potential up day in a row for this Uber. Stock's at 38. It was at $32 6 trading sessions ago. It's a huge move. It's extended. How do I know it's extended? Stock's trading at 38. ADMA, that upper band of equilibrium, is at 36. So there is room for this thing to correct back down to 36, but it's got to break its trend. You can look at, and I already drew this kind of trend line in here, you can look at a 15-minute chart or a 5-minute chart of Uber, and you're just going to see this sick pattern of higher highs and higher lows that it's been in for the last 1, 2, 3, 4, 5, 6. This is the 7th trading session of it. It's wedging here right now. Technically, that's a bullish wedge, but patterns can fail, right? From a failed move comes a fast move, so this thing could potentially break down out of that wedge. If it breaks down out of the wedge, it's breaking down out of this uptrend, and then you would look for a percentage retracement of that move. Where can we expect that to? I think probably down to that ADMA area, which is around 36 bucks. So that's kind of what I'm looking for, so kind of built into that position further today. And, we'll see how it plays out. It hasn't been easy, by any means, with a couple one-offs in certain scenarios like the beginning of this month. It hasn't been really too easy to be short, big tech names kind of in any way. So that's it. Just wanted to review the market with everyone, go over kind of my thought process. Team has been really on point recently, and if people are interested in potentially getting involved in my team, I know some of the technical stuff I was talking about today might have been a little bit advanced depending on your experience level, but again, this is all the stuff that I teach to my professional proprietary traders. I teach piecemeal, day by day, how I look at the market, how I look at extension, how I come up with these price targets, and most importantly, how to execute the idea. There's plenty of people out there who can look at a chart and be like, well, this candlestick means it's going to go up and this candlestick means it's going to go down. Fine, but how do you execute on the idea? How do you have the proper price entry and stop loss to create a solid risk reward and probability of success? I spent a lot of time, harping on the importance of execution skills. Execution skills are the key to having really solid risk reward in the marketplace. So again, you can learn in detail all the stuff I was talking about today by getting involved with T3. T3 is a FINRA registered broker-dealer. We have retail trading accounts. We have professional proprietary trading accounts. I'm a prop trader with the firm. We're one of the largest prop trading companies in the country. We have over 500 licensed professional accounts. We have offices primarily on the East Coast. Again, I am typically managing T3's New York City headquarter office trading floor. Right now I'm in Montana. I'm living the dream. It's been awesome to be able to travel. Next Tuesday, when I do the update, I'm going to be in Idaho. And then a couple months after that, I'm going to be in South Lake Tahoe, California. I'm really hoping that these wildfires stop happening. Even here, so I'm in Montana. I'm far away from the California wildfires. My sky is gray today, but there is not a cloud in the sky. It's gray from smoke coming from California, which is really kind of crazy and sad. But hopefully that gets cleared up soon, and it's been a wonderful experience to be able to trade from all over the country. I have traders on my team who are located all throughout the country. You could potentially become one of them. As I mentioned, T3 is an SEC broker-dealer and member of FINRA SIPC. All of our professional traders have to be licensed. So there's 2 examinations that you would have to pass. The first is the SIE exam, Security Industry Essentials, and the second is the Series 57, which is the Proprietary Traders exam. T3 will sponsor you for the exams. We'll provide you with study materials to sign all of our incoming traders up for an STC study program for both examinations. You get textbook, online classes, online practice tests. First, you would have to complete registration paperwork with us, and you would have to pass a background check, which includes a criminal check and a credit check. So just realize that, when you're kind of getting on board with us, that there is a little bit of a process to joining the firm. Once you're registered, once you pass the exams, only at that point can I get started trading with you. So we have 3 different trading software options available for our pro traders: Lightspeed, Sterling Trader Pro, and Wolverine or WEX. Our retail traders, there's only one platform option. It's Sterling Trader Pro. They're all excellent softwares. Personally, I use Lightspeed, but they're professional softwares. So you get direct market access, right? Again, Here is my level 2 for the marketplace. I have depth of market for the ECNs. I have tape, and I have direct market access. When I place a bid or an offer into the marketplace, I choose how to route that order. I choose which exchange to put it on. And learning routing is a huge potential benefit of having this direct market access that you can get with T3's professional accounts or T3's retail accounts. We don't sell your orders out to HFT firms like many of the online brokers out there do. If you're not sure if your broker is selling your orders out to HFT firms and you don't understand how much that could potentially be costing you, well, first of all, if you're trading quote-unquote commission-free, it's because they're selling your orders out, most likely. And you can Google your broker's SEC 606 report to get all the details of that, because they're required to disclose that information. As far as T3 goes, we have different asset classes, equities, we have futures, we have options on futures, we also have options on equities. I am primarily an equity trader, that's my focus, but if you're interested in any of this, reach out to me, I'll set you up with the right person to speak with. We've got traders of all levels of experience, from brand new people just getting their trading career started to people who have been doing this professionally for decades. And we are able to take care of all levels of experience. If you are the brand new entry-level trader, you're probably going to need a decent amount of, access to training, meetings, some hand-holding in the beginning. That's fine. You're going to have access to all that. All of my incoming traders get access to my training program that I've developed. It consists of a month worth of lectures. I do a morning meeting every day for my team. I do an afternoon meeting every day for my team. Every afternoon meeting ends in a Q&A. Every single one. And anyone is welcome to ask me anything about anything. I am here to help. I had a lot of great questions in my afternoon meeting yesterday. The meeting went long. I think it went well over an hour yesterday. I have no problem putting in that extra work if the traders that I'm working with are learning and it's helping them to succeed. So you get access to all of that. And you do need to be aware that after you are licensed and you're ready to start trading on the live account, you'll be required to commit a capital contribution to back your trading risk. What we will typically do on our end is we'll take your capital contribution and we'll start by allocating you buying power at 20 times your contribution for day trading and 8 times your contribution for overnight positions at a 90% profit split to the trader. Those numbers can vary a little bit depending upon experience level, specifics of the deal type, what you're looking for as a trader, but those are kind of our standard typical numbers. So someone who comes in with a $50,000 capital contribution will give you access to $1 million to start working with. And that capital access can really add to gains if you do things properly, but that capital access makes risk management the most important part about the business. You have to be consistently, solidly managing your risk, because with that level of access to capital, if you don't have good risk management in place, honestly, it can also be a recipe to lose a very significant amount of money in a short period of time. And again, all of the education, the morning meeting, the afternoon meeting, access to my VTF, all of that I do is for free. I don't want to charge money for that. I want the traders who have accounts with us to be as successful as possible. Our incentives are in line. If you're a successful trader, if I'm able to help you get there, it means that you're going to be with us for potentially a long time, which in turn is going to make the firm more money than I could ever make by charging you an education fee on the way in or some kind of nonsense like that. For experienced traders, we're a great spot because we are extremely well capitalized. Experienced traders, it's all about scale, right? Well, T3 can add scale to you. If you want to, be a trader and come in with, $2 million of capital because you want access to $40 million, we can make that happen. Reach out. So here is my email address once again. So if anybody's interested in joining the team, getting started with us as the process. Again, I didn't talk about it as much, but we also have retail accounts available as well. Just a standard retail account, standard margin applies to it, pattern day trading rule applies. Our edge in retail is basically direct market access at a very low commission cost and an excellent borrow list. We have great borrows. We can source borrows potentially from multiple vendors, so that kind of gives us an edge in that space as well. And again, you'll still get free access to my morning meeting, my afternoon meeting, and my VTF if you have a retail account with us. So, again, you get access to all these free programs is what I'm talking about. You get my training program, you get access to the Pro Desk VTF room, which is where I run my morning and afternoon meeting each day. You'll get access to Scott Redler. You get Scott Redler's VTF room. You get the Redler All Access as well. To get access to everything that Scott's, kind of doing. Scott's been trading since, I believe, the 90s. Phenomenal trader. I've learned a lot from him over the years. Got a lot of thanks to give to him for any of my own success. So you get access to all that. It's, we're basically the way that I view it is, if you get started with us, we are going to give you all of the tools that are necessary for success. But it's up to you to utilize those tools properly, because you still have to create your own success. I'm not going to be telling you what to get involved in, how to manage your risk, when to do it. I'm always available for questions. If you're not sure, hey Derrick, I just bought XYZ stock. Where do you think my stop loss should be? I'm always happy to provide you, what I'm thinking as a thought process on how to properly trade something in the VTF room. But you're still going to be making your own choices as a trader on what to get involved in and when, how to manage your risk, how to manage your reward. So again, we're going to provide all of the tools necessary for success. I'm like an open book with my own trading, my own thought process, the good and the bad, honestly. I think if you speak to anyone who only has ever known sunshine, roses, and rainbows in their trading, they're probably lying to you. All of the best traders I've ever met have had slumps in their career, have failed trades. Everyone has trades that fail. And, for myself, I own my good and my bad. I am happy to analyze my losers and analyze my mistakes for everyone's benefit. And I am happy to go over what I get right for everyone's benefit as well. I think that that's really important. So, again, if you have interest in working with us on the retail side, on the pro side, if you want to talk trading, if you're interested in any of those T3 Live products, if you don't want an open account with us, you can still purchase access to the T3 Live ETF. Reach out to me, and I'll either speak to you directly myself, or I'll set you up with the right person to provide you the information that you need about potentially moving forward. All right, so I am going to jump back to my trading. Solid meeting for this week. Next week I'll be in Idaho for our next meeting, and I wish everyone, successful trading. And I hope that even in these little, 30-minute to 1 hour weekly sessions that I'm doing, that I'm able to provide education to people on how markets work, how to look at markets, because as long as you're a living person who has to deal with money in your life, I think that these skills, these tools, understanding markets, understanding risk management, understanding money management, are key to any individual's success. And if I can be a part of that in even a small way, I'm happy to do so. So, as mentioned, I'm going to jump back to my trading. Good luck out there, everyone. And again, feel free to reach out if